Jim's been ramping up his criticism of AT&T on Twitter this morning by writing, quote, debating putting the AT&T people on the wall is shame. They've earned it. You really have to work at it to get on the wall. Jim, it kind of sounds like you've already made up your mind.
No, I'm a kind man. I'm a forgiving man. I don't like Dennis Hopper at the end of Apocalypse Now. I do feel I am putting these out because I want to see if other people feel as aggrieved. I went out to dinner last night, which I love, by the way, maskless, and people came up to me, all sorts of people came up to me and congratulated me for speaking truth to power. Actually, one person used truth to power. I always felt like, what is this? Like,
I know.
Some sort of revolution that I'm starting?
No.
But, David, I look at you and I say, I am asking for your advice. Maybe at a certain point, I am too tough.
Well, I think
that would keep me from
I think that you feel, and I understand it, you feel that you were misled in part about the dividend, which I know has made you very angry.
Well, remember,
I
had to resize. After my surgery, I was debating resizing this Brioni. I would never think of resizing a dividend. I think of cutting a dividend.
Let me just give at least what
are you going to give? Lucifer's advocate here?
You're Randall Stevenson over a period of time years ago, and you see potentially a secular decline in your business, certainly in terms of the growth rate of the wireless business. Okay. It's become fairly competitive. Everybody's got their group of you're changing. There aren't that many consumers who are going to go with your competitors, and you're thinking, how do I grab a hold of some growth? And you think, well, I don't know, maybe I need to move into video more aggressively. So you buy DirecTV. And then you continue to have that concern. I'm just saying here. Now, we all questioned the direct deal immediately. And
David,
many of us on air, I remember,
critic.
I was. And because it seemed all it was about was the securing cash flows to secure the dividend.
Right.
Then you do the Warner deal. And it's the same thing. Well, vertical integration is going to lead to potentially better growth. It's also going to lead to even less churn amongst our wireless base. There's going to be some confluence of positive things that occur. And you pay $107 billion, including debt, for Warner. And, of course, you sit there for 2 years waiting to close the deal because the DOJ unexpectedly comes after you.
Right. 2016,
so
2018.
Now you're John Stankey. You're less than a year into your deal, into your tenure as CEO. You see Direct. It's a wasting asset. And you say, you know what? Let's get somebody else to manage it. We'll still, maybe one day it can merge with Dish and create some value, but we're not going to do that deal. Right. We don't want to deal with Charlie Ergen. We'll let somebody else do it. But at least for our shareholders, they'll have an ability to participate should things actually come back a bit. And then you move on and you also say, you know what? As much as I love Warner and HBO, there's so much cheap capital out there. There's so much technological evolution in my core business of wireless right now and 5G and what's going to happen. I need capital. I don't have enough. I just spent $30 billion on that auction. What am I going to do? I can't fund a direct-to-consumer business the way I need to without taking from the other business and losing potentially my competitive position. And so you do what you have to do by doing this, giving your shareholders an opportunity to participate in the potential success of this business outside of your orbit. And obviously, you give yourself a new capital structure, but you got to cut the dividend.
Okay. I agree with all of that. What I don't agree with is telling people you don't need to cut the dividend. The synergy is terrific. Things are going great. We just had our first quarter on wireless. You got to stick with this HBO. I mean, Stanky did everything but tell us he really likes the mayor of Easttown. I mean, honestly, that's why I say you come back to that time-old ritual you just been had. Had he not come on air,
had he just
said, you know what, we still have to pay a lot for spectrum, for towers. But no, instead you court the wall of shame, because what you do is say, listen, we are going to have, as he said, how are we going to get that yield to be smaller? There are two ways to get a yield to be smaller. One is to have the stock go up, and the second is to right-size the dividend by putting in a release, 40 to 43% cash flow, of which you had to break out the HP12C to really figure it out. So, I mean, it was brilliant. It was a brilliant move because it fooled everyone.
Shepard Smith here. Thanks for watching CNBC on YouTube.